Hello, everyone, and welcome to another episode of Founders Grid, sponsored by Gaper.io. Today we have John. John, welcome to the show.
Thanks, Mustafa. Happy to be here.
So, give us a brief background about yourself before you became an investor at Venture Capital.
Yeah, absolutely. So I graduated from Wake Forest University in 2012, and then I spent the next 8 years or so building out my business development expertise. The first 5 years, I was at a boutique M&A advisory firm, helping to source buy and sell side advisory engagements for the firm. I then pivoted to corporate life and spent a couple of years as an account executive at Gartner before rounding things out as an account manager with Merger Market, which is an information services firm focused on M&A related news. And then for the past 3 months or so, I've been with Venture University and VU Venture Partners, participating in their venture capital apprenticeship program.
Interesting. So, how's the experience been so far? What was the experience like? Can you share a bit?
Yeah, absolutely. It's been amazing experience. So essentially the model for Venture University and VU Venture Partners, it's almost like an investor accelerator. So every quarter, we bring on 20 to 30 or so professionals from diverse backgrounds and at different stages of their career. And there is a core kind of academic component, almost like a trade school, but the bulk of the experience is really around, that venture capital apprenticeship model. All of the members of the cohort are responsible for, identifying, sourcing, evaluating, and ultimately, pitching the top investments that they source to the general partners, and then the fund ultimately selects, 2 to 5 investments every quarter. So, it's a great opportunity to get actual hands-on investing experience, which is, so hard to come by unless you happen to land a job in venture capital or, have deep enough pockets to build out your own angel investing practice.
Interesting. Excuse me. Unfortunate times because of COVID, we're hearing multiple stories that the VC landscape is changing, the investment theses are changing, and everything is changing, right? So how do you perceive the post-COVID world?
Yeah, great question. So, it's been, I guess, a challenge for us to figure out, really how the best way is to evaluate these companies, right? VU was not radically altering any of the core theses, around the verticals we invest in. We weren't kind of flocking to COVID related companies, but, when you're investing in startups, more than anything, you're really investing in the founder. So, the biggest challenge has been, how do you kind of evaluate the founding team all virtually? It's really hard to, make up for that kind of face-to-face, personal interaction. So, I think, part of it has been needing to rely even more, on the data, on our own research, on speaking with other investors, speaking with customers, if we can, we're in further diligence process, and really just, getting as many other data points as possible to mitigate against that potential risk of, never meeting, this individual that you're putting, so much, kind of capital behind and trust in, without meeting them in person.
Interesting. So, going forward, which industries do you think would outperform than others? I know it's a very speculative and a very difficult question, right? But we want to know the secret sauce, right?
Yeah. I would, if I knew that for sure, I would probably be much more active, both in the public markets, but also with some of my own capital. But, I think there's definitely going to be a trend towards, remote work, related industries. Obviously, we're seeing that already. I think as well, and, I'm probably biased here. I've been working within the fintech team. So, I'm seeing great opportunities within the fintech space, broadly speaking. We're seeing just many more, consumers kind of adopting technologies that have been around and have been accessible for quite a long time, but maybe, some that were a little change resistant are now, finally, adopting some of those, whether it's neobanks, whether it's, digital payment processing, solutions. So, I'm personally seeing a lot of opportunities there, as just, even like contactless payments once, economies do open up and you're going into offices, or, you're going into stores. I think there are going to be a continued trend towards more of those kind of digitally enabled, fintech solutions.
Interesting. Last question.
Mhm.
Um, Remote work, remote fundraising, remote team management, remote hiring. So how would you assess a founder remotely, right? So I look after sales in my company, and for me, it has always been a person-to-person interaction, right? So
Mhm.
even for a sale, I would take a 20-hour flight, and I'll be there for a sizable sale, right? But now, in the last 3 months, it has all been through Zoom calls or Google or Skype calls, right? So
Mhm.
it's similar to you. So when it comes down to assessing founders, how do you think, are you able to judge them the same way, or do you think it would be better if the world goes back to normal?
Yeah, I'm biased here, but I do believe, there is no substitute for that in-person, face-to-face connection. Um, so as soon as things go back to normal, I do still anticipate, especially within the venture capital space, or even private equity or sales, when we're looking at much larger kind of, contract values. I'm expecting people to be hitting the road again and to be meeting with people in person. But as well, I spent the, early portion of my career doing essentially inside sales, where, I had a, 1.7 million, dollar book of business, and almost every one of those clients I never met in person. And, the contract values, I guess, were small enough that we were able to, build that rapport, virtually. But we at VU, we still are making investments. We're, going to be announcing some for this, quarter fairly soon. So we were able to overcome that hurdle of doing everything virtually. But, as I said earlier, it's just a matter of, trying to mitigate for that risk, which, the founder's ability to execute and, believing in their vision is always one of the most important things. And you can only kind of mitigate for that to, only to a certain extent, even when you are meeting in person. So now adding the variable of doing that all virtually, again, for us, it's just about, building out the rest of that business case for investment. So, meeting with as many other individuals, both on the team as well as, prior investors if they have them, um, and other people in that ecosystem, meeting with more industry experts than we would have normally met with. And, it's not to say that we weren't doing those things in our diligence process, prior to COVID. But again, just as I said, it's really about doing everything you can to try and further build that case. Whereas, in prior years, we might have been able to meet with the founder twice and then know, you know, almost certainly we're going to invest in this person because we believe in them. And now it's just a matter of, making sure there's no red flags. It's hard to get to that space and to that place virtually. But, as I said, we're still investing. And I know many of the other, VC firms and, VCs that I know, they're still investing, just with, a slightly different diligencing process, I think.
John, thank you so much for being on the show.
Of course.
Take care of yourself, stay safe, and let's
Thank you.
pray that the world goes back to normal ASAP, and so that
Yep.
we go to the old style. Thank you so much.
Awesome. Thanks. Take care.